Hey, good morning. Good morning, everyone. Uh, this is the Chartered Institute of Logistics and Transport, the webinar on maritime and shipping. This is one of our third uh, webinar on the maritime and shipping. Today, welcome participants from all over the world. It's 11 a.m. in Singapore, probably 4 a.m. in Africa, and in the Middle East, 7 a.m. Today, our topic is on the Red Sea crisis, impact on shipping and ports. As per our discussion issues, we've mentioned that the Red Sea crisis, which started in November last year, has dragged on for 5 months now, and the full resumption of transit as of today, 11th of April, is still not in sight. And this is causing a lot of rattling of supply chain, leading to shipment delays and higher costs. But we're hoping that it won't derail global trade and it'll be short term. And because of shipment delays, there are some inflationary impact on higher container rates. So our purpose of discussion of this topic today. The number of vessels entering Bab el Mandeb Strait, the Red Sea entrance, is still declining, while the Cape of Good Hope roundings have gone up. I'm happy to record in terms of registration, we have quite a lot of our African friends, particularly from the Chartered Institute of Logistics and Transport, our chapters in Africa. And now we have also a number of tankers not going through the Red Sea entrance and rounding up over the Cape of Good Hope. So rerouting container trade is the new normal and has been priced in. And then production interruptions of manufacturers hopefully is short-lived and trade delayed and not derailed. And with that, I'd like to introduce the first speaker to our webinar today, Mr. Punic Oza, founder of Maritime NXT. Punic Oza has over 30 years of experience in dry bulk shipping, holding senior management positions in some leading shipping companies, including Precious Shipping, Noble Group, Probert Covenants. At Covenants, after holding senior commercial positions, Punic spearheaded the digital transformation of Covenants dry bulk. And after working in various corporates, Punic now runs his own company, Maritime NXT Singapore, a platform dedicated to training, teaching, mentoring, consulting, and collaborating in commercial shipping and digital transformation space. So with that, I like to invite Mr. Oza to make the first presentation on the Red Sea crisis impact on shipping and ports. Mr. Oza, please.
Thank you so much, Thomas, and thanks a lot, CLIT, for the opportunity to speak. One of the credentials which I would also I'm very happy to have is I'm also a lecturer at the Singapore Management University on geopolitical risks and impact on trade flows. So this is something which I think is right up my alley, something I've been following very closely. So I will try and build a historical background and talk a little bit about trade flows, because I think we've got some very senior people with Captain Dutt as well as Dato James who actually should be able to give a lot of insights, and I look forward to their insights as well. Can we have the next slide as well? Can we get the next slide? Yeah. So just to give you a perspective, that there's a lot of public discussion today about what's going on with regard to geopolitics and what's happening in the Red Sea. There's a lot of political discussion, economic discussion. You can see all these issues from Iranian head of state and Biden and Rishi Sunak as well, talking about various aspects. But the The next, please. The private dimension is what we are really interested at the end of the day. The unseen dimensions. How do people source their commodities? How do trade routes change because of this challenge today? The security concerns which are existing today are not something which are new, but they have actually been simmering for a while, but they've actually changed trades in past as well. Hubs have developed because of that, and most importantly, these conflicts are left because of a lot of the historical baggage over the years. So trying to understand that is what we'll try and do in the next 5 minutes, and then look at what we can try and learn from the history as well. The next slide, please. So if you see the areas of control of the Houthis today, they pretty much control the whole of capital Sana'a and key western port of Hodeidah. The history of the conflict is that basically in 2014, the elected Yemenis government was basically protested by the Houthis. At that point of time, it was essentially to do with fuel subsidies which were reduced, and that created an internal civil war kind of a situation. And they managed to capture Sana'a, and then over a period of time, the current government, which is still the recognized government in Yemen, actually had the problem of moving away from Sana'a, had to flee to Aden, which is the southern port. And the Houthis are allegedly backed by the Iranians, while the current government still recognized in Yemen by the current president is backed by the Saudis. So internally in the Gulf itself, that has actually created a bit of a division in terms of how the Saudis and Yemenis, Saudis and Iranians have actually looked at territorial challenges. The area of control is what is most important to understand, that they actually control vast areas in Yemen, which means that they have access to pretty much the entire transits in Red Sea. And this conflict is also unique in the sense that 2022, there was a ceasefire agreed between the two factions, the Houthis and the Yemenis recognized government by the international community. And at the end of the day, the UN brokered ceasefire actually broke off only because of the Israel-Hamas conflict. So this conflict is very much linked to the Israel-Hamas conflict. And that is why it's one of the different flavor of a conflict compared to the Russia-Ukraine, which is more a territorial discussion. This one is more an ideological discussion, which is basically formed because of the Israel-Hamas conflict. Can we have the next slide? Exactly. So here it is. Today, I believe the total number is over 145 ships which have been attacked in the last 5 months, like Thomas mentioned. The interesting part is that the Bab el Mandeb strait, which is basically the passage through which the vessels have to pass, is only 14 nautical miles wide between the Djibouti and the Yemenis coasts. So it's a very narrow space. You can't speed through that. You obviously have to slow down, and you are sitting ducks literally in terms of target practice for the Houthis and the rebels. The Bab el Mandeb interestingly translates from Arabic into a Gulf of Grief or Gulf of Tears. It's ironical that that's exactly what it has become now for the shipping community. Shipping intrinsically or incidentally is a bystander in this entire discussion. It is not just engulfed in a war, which is predominantly, as I said, something which is different from the shipping perspective, nothing to do with shipping. But because of the fact that the Houthis want to make a statement and want to affect or impact the American interest, the UK interest, and the Israeli interest, they've decided to start bombing these ships as such. Interestingly, they have not really not got the latest information in most cases, so they are even bombing ships which are owned by other interests at the end of the day. And that's where the shipping has actually got involved, because the strait, the critical pathway, is where it is obviously impacting the most. Can we have the next caption, please? And this is exactly what Thomas mentioned. Nearly 300 less ships per week through Suez Canal due to the crisis. This is from AXS Marine. They have got updated information pretty much real time or near real time. And you can see literally it's a tale of two worlds. Just to remember that Suez Canal tolls make up 10% of GDP of Egypt. So this has huge economic implications for the Egyptian economy as well. And that is something that we still have to see how it pans out in future. So Egypt is actually the most affected in terms of economic, while other countries are impacted more from a territorial perspective as well. The next slide, please. And now I just quickly go through the trade flow, just to give you a map, a lay of the land of the Red Sea. You can see the countries like Jordan, Egypt, the Red Sea space, Eritrea, Sudan, Yemen, Saudi, Djibouti. All of them effectively can only be serviced through this particular region by the Red Sea, by the Suez Canal. And that means that this is something which has very important implications. If Jordanians want to export their 10 million tons of rock phosphate, they have to go via the Red Sea and they have to go via the Bab el Mandeb. And that is obviously going to create challenges. The Saudi Arabians have a joint venture with the Chinese on the refinery in Jeddah, which is exporting petcoke and oil products, have to pass via the Red Sea. A lot of these trade flows will have to find different origins, different sources, and that will have a huge impact on what is going to happen in future. Also remember that even if the Israeli-Hamas conflict is solved, there will be a hangover for some time, and we have to see how that hangover works. So there are tremendous trade flow impacts already being seen and will be seen even further. The next slide, please. Yeah, I will just quickly end with the last lessons learned from the last Suez Canal crisis, which incidentally was exactly 50 years ago. So this is very interesting. If you look at short-term implications, you can go to the next. You can show all the captions. That's okay. There are 4 captions, I think. 75% increase in sailing time, massive cost implications, huge spike in oil prices, massive contraction in supply, and inflation challenges. Today, the oil prices are not really an issue because oil prices are effectively controlled or balanced because America has now become a major exporter of oil, which was not the case in the 60s and 70s. That is why the oil embargo worked. Today, America is a competitor and not a customer of Saudi Arabia and the Middle East for oil. And therefore, the inflationary challenges are less. But as far as the other challenges are concerned, increase in time, increase in cost, and contraction of supply and ships is obviously a big advantage or big issue with regard to shipping. You can go to the next slide. And again, I will just end with the long-term implications of the previous Suez Canal crisis. You can show all the captions. This is the time that the eco ships started really coming into the market. A lot of new buildings were ordered. And then you had, most importantly, supply sources changing because people started evaluating what is the delivered cost of my goods in Asia, in Europe, and therefore they started looking at alternative supply of goods because the 75% additional sailing time makes no sense after a point of time. New windows of opportunities opened up, but most importantly, there was a lot of biases and mistrusts which actually have still fostered over the years. There is still a lot of challenges which Middle East is going through, and America's view of Middle East has also changed over the years because of the first crisis in Suez Canal. Europe has changed its outlook as well. Will it happen again? It might, but it's interesting to see where the next implication for shipping would be. Currently, the container shippings went through a huge increase and they've come back to a more lower level now. But overall, this is positive. Most crises in the world are positive for shipping. This one is no exception. But it is, as I said, very much linked to the Israeli-Hamas conflict. Just to end, I believe the Americans are also using backdoor negotiations with the Houthis now. At the same time, there is also Iran looking to enter into the war directly with Israel. All these implications are geopolitical in nature and will have huge implications as this conflict has the ability to go wider, and that can become a big problem for shipping as well. So just keep an eye on it. It's still not the end of the story. I'll end my presentation here and let Dato James take the next slides. Thank you so much.
Well, thank you very much, Mr. Ozal, for the... Can everybody hear me?
Yes.
Yeah,
Clear.
thank you very much, Mr. Ozal, for the very fascinating and engaging presentation on the current situation. Dato James seems to be trapped in the traffic. I've been calling him. Why not we get Mr. Captain Dat to present first, and if he doesn't come on, I will make presentation on his flight as well. Can I then introduce Captain S.S. Dat, Executive Director of OM Maritime. Captain Dat is a shipping veteran of more than 40 years and is presently the Executive Director of OM Maritime Private Limited. He was also the Executive Director of Krishnapatnam Port from February 2010 to August 2015, where he was over in charge of port marketing. Before that, Dat has an illustrious career with the Pacific International Line, the group until 2008. From 2006 to 2008, Captain S.S. Dat was the CEO of Pacific Shipping Trust, PST. PST was the first listed shipping financing vehicle on the SGX. He took the company through successful IPO in May 2006. During that 2-year term, Dat has doubled the asset base and the revenue. From 1988 to 2006, Captain Dat headed various management positions with the PIL Group. Till 2006, he was heading the strategic planning team, designing liner network and optimizing vessel utilization, alliance negotiation. From 1971 to 1988, Captain Dat was on board many ships as a ship captain and was in command of many vessels. With that, I'd like to invite Captain Dat to present his ideas and his views on the current Red Sea crisis, in particular impact on ports and shipping. Captain Dat, please.
Okay, sorry about that hiccup, but we are now ready to roll. So thanks, Thomas, for introducing, and okay, I jumped the sequence, but I think Puneet has given a very good background on the events which led to this present situation in Red Sea, and the impact on trade flows, vessel transits, etc. So I'll just be specific on how ship owners are looking at this, okay, because we have ships which may or may not transit Red Sea and the passage, so I'll look at that. So yeah, thanks. Next slide, please. So essentially, this transit, the maximum impact is with the owner, okay? Absolutely, because why? The asset and the crew, very importantly, the crew are at risk. So for a ship owner, it's the financial responsibility of his asset, and of course, his moral responsibility to the crew, to the safety of the crew. So let's look at the asset can be insured, you know, and I'll talk about that in the later slides. Let's see what exposure the crew has and what kind of compensation they get. So IBF is a international bargaining forum which acts on behalf of ITF. ITF is the Transport Workers Union, you know. So what does IBF say? That when the ships pass through these areas, which are mentioned there, you know, Bab el Mandeb and the straits, and the Eritrean coast, etc. So they get a bonus equal to basic wage, which is minimum 5 days, or if it's longer, then longer. Okay, so effectively they get double salary for that, and then of course, God forbid, but double compensation for death and disability. Number 3 is very important. They have the right to refuse. Okay, and if they refuse to transit, so no shipping company can pressurize or push the crew to do that transit, or tell them they would have disciplinary action if they did not do so. So they would have to then be removed at a suitable port, and then because they would go unemployed, they would have to get 2 months' wages. And then, of course, the International Ship and Port Safety Protocol would go to level 3. Okay. So this puts you in a lot of uncertain position, because unless you are a container ship which is regularly plying that route, you, on a tramp ship, you do not know when you have a fixed voyage to transit the Red Sea, and then you do not know whether the crew would be willing to go or not. So there are too many balls in the air, to juggle around for a owner. Next, please. So let's look at what all it would cost. So on the on the left side, you see the insurance premium. Okay. Presently, it is, the insurance premium varies with the risk situation, so it is not fixed. It has moved from 0.25% to 1%, so effectively 4 times. And so just for some ballpark figures, if you had a small tanker, the insurance premium would be 50 or 1,000, and if you had a large LNG vessel, the most expensive ships, or even a large container ship, a 20,000 TEU, the premium would be about $1.25 million US. Okay. But it's not just the insurance, it's not just paying the money. Certain warranties come with it. Warranty is basically an undertaking given by the assured, the person who's being insured. So what are the undertakings, the warranties rather, which is on the right box? You must have 3 armed guards, okay? You must take out a $5 million kidnap and ransom policy over and above your insurance from your hull underwriters. Just remember, the kidnap and ransom insurance is provided by different insurance providers. Now your hull or P&I insurers don't provide that. Then the ship needs to register with UKMTO and MSC. These are the respective joint navies which are patrolling that area. Talking about navies, the Indian Navy has been doing some very creditable work, patrolling that area, freeing up ships which were held up or hostage by the pirates. The piracy problem has sort of dovetailed with the Houthi attacks. It's 2 different things, The piracy are doing it only for money, whereas the Houthis are for different objectives. The third warranty, and this is very important: no Israeli, United States, UK ownership or interest. Now, how this is interpreted is, there are many ships which are, for some reason or the other, funded by US private equity funds. They are quite active in the ship financing space. So in the event your vessel has any kind of funding arrangement, financing arrangement from US or UK, the insurers don't want to touch these ships. Okay, so that's very important. And the last one is no onwards previous last call Israeli port, or the AIS should not show any Israel port as a destination. So long as you comply with all that, then you are eligible for cover. Thanks. Yeah, next slide, please. This is again a sort of just an example, but using the extreme case. That is, let's say your crew refused to sail on the ship, then you would need to remove that crew fully. You would need to get a replacement crew. You would need to compensate the crew. I told you about the 2 months salary, and then comes your armed guards, your insurance premium, etc., etc. You're looking at about $250,000 as the cost for transit. which again would vary from time to time. Next, please. So, who pays for this? In the end user pays for this. The ice cream that you buy, or the clothes that you buy, or the petrol that you fill in your car will have this cost built in. You know, the shipping lines are not going to bear this cost. So, so that's the thing. Interestingly, yeah, the Puneet mentioned about Houthis. Houthis are probably trying to show that these attacks are to support Palestine in a sense, and I don't know whether it implies that if Israel stops the attack on Palestine, will Houthis stop their attack on shipping? It's left in the air. But yeah, I mean, from the seafaring community, it doesn't justify killing innocent seafarers. You know, 3 people died on one ship which was hit in the accommodation. Yeah, next please. So what's happening in the market, you know? Let's see. These are actually actual source from website or other sources. So look at this company called Sea Legend. Moment this problem started, many of the reputed liner operators stopped serving the Red Sea. But what happens, as Puneet pointed out, they still need to be served, you know, Jeddah and Sudan and Hodeidah and Aqaba. So this Chinese-owned container company called Sea Legend went and operated with a forwarder, etc., and advertised that we will provide continuous and uninterrupted services to the Red Sea. So this is what's happening in the market. You know, that's why I put the Red Sea remains open for business. And then the next slide, lower half. Yeah. So you can see some container ship owners, because you know in the charter market, container ship owners offer their ships. So they are putting it on the top, they're putting the title that vessel can trade the Red Sea. You know, so it's not that there's a total void, you know. So this is some examples of what's happening in the market. Yeah. Yeah, next please. I think coming to the end. Yeah, that's it. Yeah. Yeah, okay. So I will just add on to what all some points that Puneet mentioned is how critical the Suez Canal is for Egypt. Yeah, it's after tourism, it's the second biggest revenue earner for the country, and he obviously this throttling of the flows is creating a massive disruption in their finances. You know, I think somewhere between 9 to 10 billion dollars is the annual revenue on the canal. So if that is even cut by 1/3, it's substantial. Yeah. So thank you. That is it. And then I look forward to questions later on. Thank you, Thomas.
Yes, thank you, Captain Dat. Very, very interesting evaluation of the shipping costs and all the impact on shipping from the Red Sea crisis. And the next speaker we will compile all the questions at the end of the 3 speakership. And then the next speaker we have is Dato Ian James. He is the present Vice President Asia Pacific of Hamburg Port Consulting. Dato Ian James was the Chief Operating Officer of Yilport Holding from Turkey, a subsidiary of Yildirim Turkey from 2020 to 2022. Yilport is one of the biggest global port operators around the world. And before taking on this role in Yilport, Ian was the group CEO of Malaysia's largest port group, MMC Port, from 2016 to 2019, where he oversaw 5 terminals in Malaysia, PTP, North Port, Johor Port, Penang Port, among these terminals. In addition to this executive position, James held directorship in all the companies that under his preview of MMC Port. Prior to joining MMC Port Holdings, Dato' Ian James was the Chief Operating Officer of Westport, Malaysia, the largest port in Klang. He began his career as a deck officer in 1981, rising to the rank of Acting Chief Officer of NOL, involved in container tanking and general cargo vessels. And with that, I'd like to welcome Dato' Ian James to speak on Red Sea crisis impact on ports in particular. Can we have Dato' Ian James, please?
Hi, good morning, everyone, and sorry for jumping in late. Technology issues, by the way. Could we have the slides, please, Thomas?
Thank you.
And thanks for giving us the opportunity here. Yep. Okay, hi. So I'm going to look at more from a perspective of ports, although shipping is mentioned over there. I believe Punit and that Captain Dutt have already elaborated quite extensively on that. Let's go to the next slide. As we all know, the Suez Canal is of primary importance to how important it is to the trade between the Asia-Europe continent. Suez Canal is basically the fastest and shortest route between Asia, Europe via the Red Sea, between the Atlantic and Indian Oceans. What you'll see in this diagram is mainly the core routes, which are in bolder light blue lines with the main hubs or transit points, and then you have the secondary routes. So if we look in terms of volumes, 12% of global trade and substantial 30% of global container traffic traverse the region, right? The shipping route is strategically positioned in Suez Canal, and I believe the illustrious panel has also mentioned how critical it is to Egypt, right? So the next slide, please. So if I look at it a bit in detail here, right, as we can zoom in on the Straits of Malacca, all the way to Europe via the Suez Canal through Bab el Mandeb Straits. If you go down the Cape of Good Hope, you're looking about 12 to 14 days additional sea time. It's longer transit time, so obviously it's the challenges that have the impacts of the alternate bunkering points. Although these days. 你问一下他有什么事情。Although these days, basically, ships tend to bunker from the main nodes, basically in Singapore and in Rotterdam. You, of course, have higher shipping costs and, of course, a big loss in transit for Red Sea traffic in Red Sea ports. African ports, although have now sort of could consider themselves an alternative, they're generally congested, especially particularly Durban, right? And unfortunately, I think last week we just saw the first one in Hambantota ports, the first transshipment done in Hambantota ports. I can't remember the number of volume, but I think it was a MSC vessel that came in and did some transshipment in Hambantota. So this is typically the example of what happens as you people find alternative ports to provide the feed. The next slide, please. So if we look in terms of volume, trade volume shifts, right, and therefore this obviously correlates to the Red Sea ports, right? What we see in this diagram is Panama Canal is also slightly in decline due to the lack of water, but generally you can see the Suez Canal has seen a huge dip in transits, and of course around the Cape of Good Hope the volume has gone up by what we say here surged by 74%, right? Essentially, as you said, Suez has lost nearly 50% of its in the first 2 months of this year. Next slide, please. So the impact of Suez, I believe, was touched earlier on, as Punit mentioned, or that the study is what the 52nd largest GDP contributor to Egypt, has lost 37% of its revenues, canal revenues, year on year, right? So 22% of global sea trade transits through the Suez Canal. That's practically gone, right? 37% reduction. Next one, please. This one shows basically a little bit more detail of the importance again and how the liner services have impacted. 80% of exports to Europe takes place via Red Sea. 60% trade with Europe typically transits through Suez Canal. The Suez Canal tolls are close about 10% of GDP of country. Sudan irritated depending on aid cargo, and of course, major supply of rock phosphate in Jordan is sort of dried up. So if we look in terms of services which we obtained the data from Alpha Liner, you'll see number of services 21, 19, and 16 impacted on the Asia-Europe trade. And of course, we see the going up of it says skyrocketing of freight costs. I don't believe it's skyrocketed, but it has gone up. Not as bad as it was, but it sort of led to some recovery for the lines. Next one. Now, if we look in the ports on Red Sea, right, there's showing Djibouti. You've got Djibouti on the, look at the picture on the right. You've got Jeddah, you've got Port Sudan, you've got Suez. All right, all these terminals have extremely ambitious growth plans. Port Sudan, 1 million capacity. Djibouti has a huge plan to do another 1.5 million. King Abdullah Port has no plans, but Jeddah is also on its has plans to expand the terminal, and Neom, of course, we all know is being built, and that's going to be a huge 35 million capacity, right? So they have to contend now with reduced vessel availability, much higher freight costs, and insurance premiums to determine the detriment of the maritime trade. Djibouti, Jeddah, Neom have got significant investments in port infrastructure capacity, but requires for them to recover, the port traffic to come back. Jeddah, King Abdullah has seen a reduction in vessels calls of 40% and 76%, respectively, from Q3 to year-to-date 24, according to Drewry, and other ports affected. And simply, as you can see, with the transit of Suez stopped, impacts are also being felt in Gyotaro, Piraeus, and Port Said. Although Piraeus has recorded strong volumes, this tends to be vessel volumes being dumped as port of refuge for Red Sea cargo that needs to be planted somewhere. I think we had a bit of congestion in Tangier. We know Turkish ports are seemingly attractive to the lines. Unfortunately, Turkey, as we know, lost one of its terminals in the Kofes Bay with the Yangming vessel hitting its cranes. But essentially, typically in a situation like this, ports of refuge are found for long-dwelling containers that will then be fed from the opposite direction rather than the typical route from Asia to Europe. Next one, please. So that's my final slide. We'll take some questions. So basically, just a bit of a HPC. We're based out in Hamburg, but I sit out in APAC in Singapore as the VP representing them across the Asia Pacific, which for our geography starts from the Indian subcontinent all the way to New Zealand and up to the north in Japan. Thank you very much, Thomas.
Thank you very much, Captain Ian James. Captain Ian James has given a very good feedback, impact on ports in particular. And we have actually received quite a lot of questions, more like 80 of them. I have selected around 10 to ask the panel. One of the questions says, what sort of suggested cost-effective alternatives to avoid delay due to this situation? Why not we start with the shipping veterans to look at cost-effective alternatives to avoid delays?
Thanks, Thomas. Okay. As I explained, look, there is no way those costs can be removed. It's only how to manage them, which again is not really in the vessel owner's hands because it varies with situation to situation. So that is one as far as the cost goes. Now, regarding the option of going via Cape of Good Hope versus Red Sea, it's again a bit different. for liner, for the container ships, the carrier can take a call. As Dr. James pointed out, they dumped the cargo in Piraeus or dumped it in Hambantota, and then see when situation improves. On the charter vessels, that is dry cargo or tankers, it's a little different because the charterer can take a call before fixing the ship that, look, I want only Red Sea. Actually, some cargoes, the delay is too much and it's not meaningful to do the voyage from the charterer's perspective. So nowadays, on the dry cargo, the charterer puts in a clause, only Red Sea transit. Obviously, they are prepared to absorb that cost. So the vessel owner would then build in those costs, which I showed you, into the freight. So that is as far as the cost goes. It can be managed, but really it cannot be removed.
Yeah, I agree with that, with Captain Dutt's analysis. The only way that you can bring down the cost, average cost per ton of commodity or per container, is by either increasing the volume that you're shipping on the ship, because Suez Canal obviously has restrictions in terms of what size of ships can go through. That restriction suddenly is gone now that you can go via Cape of Good Hope, because it is able to take bigger ships. So if you are actually able to increase the shipment sizes, that can reduce the cost per container and cost per ton quite considerably. But having said that, that's not an immediate change. That needs the entire supply chain to become a lot more agile, and ports to start receiving more containers, and dry cargo shippers and buyers to actually start negotiating different cargo contracts as well. So if somebody is buying 50,000 tons of rock phosphate, he cannot suddenly start buying 75,000 tons overnight, because he has no storage facilities in the port. So a lot of these things are trickle down discussions which need to happen. It has not gone on that long enough to see a permanent change, but it can definitely have some long-term implications if people start changing sources, changing shipment sizes, and thereby reducing the costs on delivered quantity going forward. Also remember that shipping is the most economic way of shipping any raw materials and commodities. So even if $250,000 is added to the cost, on a per ton basis of the finished goods, it's a very small percentage. The last time I heard about it was your Starbucks coffee will cost you 1 cent more because of the fact that the container freight has gone through the roof. So you have to understand from a perspective of cost, it is about end users' cost, which is not significantly impacted, but charterers, operators will have an impact because they are paying more for insurance premiums as well as for ships trading the Red Sea.
Yeah. So I just continue the one last line. Exactly what Puneet said is, on a 250,000 $250,000 cost, if you had a Supramax 50,000, that just comes to about $5 a ton more
of raw material cost.
raw material. Yeah.
But the finished products can actually be even smaller.
Agree. Yeah, but that being said, I think, we'll talk about this when we refer to the problems that we're having today and the agility of the market. I think if this had happened after, I think we've sort of adjusted quite substantially to COVID. So I think supply chains have already been stretched, right? I mean, when I ran terminals throughout COVID, the number of complaints I got for for delays or etc., or actually productivity drives from shipping lines was almost zero, right? Today, the same thing will magnify itself. Terminals are hungry for business, particularly where you saw in my slide where they've dropped Piraeus, Gyotaro. They will accept these cargoes at these volumes at reduced cost. They even negotiate the storage charges to such favorable levels with the line. So the impact to the actual terminals are huge, but the impact to the end consumer is almost negligent, because obviously the appetite of the terminals are okay. It's a volume game, right? You want to use this to gain as much leverage ground on your competition, right? To a point, but you have to also balance between congestion and etc., right? So you find a fine line, you find alternatives, but and typically the only consequence of all this is, of course, when they declare general average and then becomes a contributing cross for getting your containers out. But aside from that, generally the behavior of lines is to absorb all these costs as much as they can, squeezing their vendors to a point where the owner of the cargo, whether the shipper or consignee, at least in the container trade, is, I would say, limited in exposure, and therefore the transference of cost to the end consumer is almost negligible.
Yeah, thank you. That's very,
Thank you all. Thank you all. I'd like to ask another question, which is posed by the participants. How the crisis would impact to the investment in marine structures in the region. The region would be the Red Sea, Africa, Middle East, and would this be a boost for ports in Africa? I think this participant probably from Africa. Maybe we should start with James first. Captain James.
Right. Okay. I think everybody. I think we need to look at it from one perspective. This Red Sea closure is probably going to be temporal. It's not going to be permanent. There will be a solution will be found for it, right? The investments in NEOM, the investments in King Abdullah and Red Sea will continue, right? Djibouti is still hungry to grow. They need to feed the entire cradle of Africa, at least in North Africa. Sudan has got and has a problem. Of course, there's a humanitarian issue that they need to provide food, but the investments will continue in Africa. In the Red Sea region. It will be delayed, no doubt, but I think the region is too critical to sort of say it's going to be a boom for another region. I mean, even Turkey, for example, even though they would be beneficial, as I mentioned earlier, and I mean, I spent quite a while in Istanbul, they would benefit short term, but long term, they wouldn't, right? So I don't see a major shift in African ports booming. They will continue with their plans, but I think because I think everybody's going particularly in Africa, particularly in these ports, we are looking at volumes which are import or export volumes. You're not looking at transshipment, right? So for me, the port will continue its development. It's just on a different timeline. Thank you.
I just add here, Thomas, on the fact that we have to also realize that significance of the alliances that are being formed in that region will also drive a different level of investment, in my opinion. So you have the BRICS now expanding to BRICS Plus. Saudi Arabia and Iran are both in BRICS Plus, extended alliance, and Ethiopia and Egypt are also in that alliance. So effectively, what we are trying to now see is that how do we see an alliance investment discussion happening now that this conflict is actually broken out? So there are so many factors which will play out at the end of the day when the crisis gets resolved. There is definitely pent-up investment which will happen, but I agree with Dr. James that Africa has a plan of its own. It has its own internal demand structure, which is because of its demographic advantage. It will grow in its own way. And I don't think this temporary crisis will actually spur any specific investments only for that particular region, unless, in supply chain strategies, for example, people are talking about China plus. That doesn't mean that China goes away. Is it China and something else comes along? So here you might actually find a Middle East or Red Sea plus strategy where you will actually see investments being diverted to other parts. Could be Africa, but it's never going to take away the impetus from the Red Sea itself. I agree with that.
And I'll just add on to what Dr. James said is, look, to my knowledge, the African ports are, as you rightly pointed out, import-export, struggling to manage their own volumes. None of them have the surplus capacity to take in transshipment or diverted volumes. Yeah. Thanks.
Yep.
Thank you all for very interesting comments on the port new investment as a result of the Red Sea crisis. The next question from the participants, we probably could look at the supply chain impact. There was a question on how to reduce inventory holding costs. With the increased transit time due to the Red Sea crisis, how to reduce inventory holding costs. So can we get anyone to start on supply chain impact?
So I can say from my experiences of dealing with customers in past, especially on the dry bulk side, a lot of them essentially have a supply chain and a kind of a time lag by which they need the commodities, right? So it is important for them to be able to plan a little bit in advance when they start looking at alternative sources. So I think my understanding is that a lot of companies have already started, the commodity trading side or the end users already started looking at alternate sources. I know an Indian phosphate importer who's already talking to Saudi Arabia and UAE to actually start importing phosphates from there, which earlier they used to do from Jordan. So you will see that the impact of this will be that people will try and look for alternate sources. Inventory reduction is more about just-in-time shipping. That can be achieved through technology, transparency, and ability to actually control the supply chain. That will take some time. I don't think that you can immediately have a quick fix on that, but I still believe that alternate sources of supply, which are more secure, can agree or can get people to reduce the inventory holding. A lot of these people are also having financial challenges because their bankers or financiers are also interested in making sure they don't have a shutdown challenge, and therefore they can't really reduce the working capital or even inventory beyond a particular threshold. So it's not an easy solution, but I can tell you the only way to do it is look for alternate sources, and I believe the end users are already starting to do that as we speak, basically. Yeah.
Yeah, I just add on, thanks. You know, for a retailer or for a factory operator or whoever is importing material, I think they would definitely not want to see their shelves run dry, like cold storage or NTUC or Walmart. They will do what it takes to make sure everything is well stocked. We saw during the COVID, the Trans-Pacific container charter rates rose to $200,000 a day. They were being time chartered by the people like Walmart and etc., just to make sure that the supply pipeline wasn't disrupted. Likewise, as Puneet mentioned, the cost for a factory to shut down because of lack of raw material will be catastrophic. So they will, the Singapore term is called kiasu. They will make sure that the supply is maintained, be it through duplicate channels. Yeah, thank you.
Yeah, actually, but the only thing I'll add to both what Puneet and Captain Dutt said was very simple, right? I think we learned an invaluable lesson during COVID as the supply chains were extended, were stretched. People absorbed those costs. They expected it. So I think if you look at what the impact of COVID against the impact of Red Sea, comparatively, they are totally different scales here. US is largely not impacted to the same extent as they were by COVID, right? Only Europe and the Med today probably in Red Sea ports are pretty impacted. So these costs for holding inventory were already sort of rationalized during the COVID and people got accustomed to it during the COVID era. And anything now is still incomparable to those costs that were being impacted then. So everybody's already looked at the supply chain. I think I always use this analogy in the old days before COVID, and the same with the Red Sea. When you bought something from Amazon and they said delivery within 3 to 5 days. Before, when you got it on the 5th day, you'd call up Amazon and say, "Where's my product?" Today, after COVID, we sort of said, let's give them another couple of days. We know the supply chain is broken. Let's call on the 7th day. And then the guy comes on the line and says, "Oh, by the way, we have a little bit of problem. Maybe we'll get in 2 days." You're quite complacent. You put the phone down and say, "Okay, I'll call on the 10th day again." And 10th day or 11th day it arrives, you're grateful. You don't look at the commitment of 3 to 5 days anymore. You're already accepting that in your mind, you've built in the delay of the entire supply chain and you've added your own 1 week to that. So I think this is the change of customer behavior, consumer behavior, at least on the manufactured goods, and therefore people are more tolerant of any delays that are incurred as supply chain. That being said, retailers, as Dr. Vandat's mentioned, they don't want to lose to their clients to somebody else, so they would absorb this inventory holding cost. And I think today a lot of people have already split inventory holdings and have already incorporated them. It's just you're going to get slight peaks and troughs that you need to manage. And if it's tolerant between your profit margins, you'll absorb it. If it can't, you go up by, like I said, 5 cents, 10 cents, and it's not even really felt by the consumer at the end. Thank you.
Well, we are now at 11:58. Wow, we have 2 more minutes, and maybe go around with that impact on the shipping industry and maybe the ports along the Straits of Malacca. With 1 minute each, can we go around? Maybe starting with Captain Ian James.
Well, I think, as I said, I think we talked about this. This is temporal. I think the shipping ports are very resilient. The resiliency of ports will ride through this wave. As I said, consumers are also tolerant of this. The key is in some major ports, maybe there'll be a slowdown in investment because for stability reasons, appetite will be changed. But overall, I don't see it as a major I would say issue in terms of investments in ports and terminals, and there won't be no direct impact to people, to layoffs and things like that. Unlike when you have a major crisis, I think if you were to bring Baltimore, probably have bigger impact than Red Sea, at least on the ground. Thank you.
Thank you, Captain James. Can we have Mr. Ozal? Your last one.
Yeah, thank you, Thomas. I would just summarize with the best case, worst case scenario, I believe. The best case scenario for me would be that the Israel-Hamas conflict ends quite quickly because of the fact that I think even America has now reached its tether with regard to the support for Israel. So obviously, I think the ceasefire is the best option quickly. The worst case scenario is that Iran and Israel actually enter into a conflict area, and more tragically, the Houthis realize that they can impact commercial shipping on a regular basis, and therefore this becomes a bigger threat or a more constant threat going forward, even if the Israel-Hamas conflict is not there, because the Houthis have an agenda as well. So the best and worst case scenario is a very wide swing, but I hope that the best case scenario works out for us and for all of us in the global economy. Yeah.
Thank you.
Yes, last but not least, Captain Dunn.
Thank you, Thomas. Yes, it's been a very interesting discussion on the impact to shipping. Okay, I'll break it down. The container shipping, which was really suffering. I have in a conference about a month back, the CEO of one of the Singapore-based container lines unequivocally mentioned that had it not been for the Red Sea attacks, we would be deeply in the red. So separately, tankers have been enjoying a bull run for the last 2 years. We operate small tankers, we're enjoying that, and that has further increased. So tankers are probably in the best wicket now. Bulk carriers, I don't know, it goes up one day and down another day. But so it's difficult to do any forecasting. But as we all agree, this is temporary. So sooner or later, the ceasefire will come, and hopefully Houthis, as they are saying, they've been supporting Palestine, will then stand down for a while. So things should improve in the coming weeks. Yeah. Thank you.
Thank you all. Thank you, Captain Dutch. Thank you, Mr. Ozal, and thank you, Captain Ian James, for this very exciting and very interesting ongoing Red Sea crisis topic, impact on shipping and ports. And that concludes our 1-hour webinar. Thank you all for taking time to attend the webinar.